Hey everyone, welcome to another special in-person episode of the Julia La Roche Show. We are joined today by Anthony Scaramucci, founder and managing partner of SkyBridge Capital, author of multiple books, including your newest, The Little Book of Bitcoin. And I should also mention the host of the Open Book podcast, Open Book with Anthony Scaramucci podcast.
Yeah.
And gosh, you've written several books and you've been a longtime friend of mine and someone who's been very good to me over the years.
Well, you've been great. Look, you're a great journalist. You took a little sabbatical on us. We missed you. We're very happy to have you back in the place where you belong.
Yeah, it's great to be back. And also, we've had you on the show, and this is your second appearance, but you were one of those guys in the early days that knew me and trusted me when I had no viewers. So it's a pleasure to have you on, Anthony.
Listen, you're easy to trust because you're authentic. You know, it's what makes your podcast great, and you know this, but I listen to your podcast, is that you're real and you're also intellectually curious. So you're looking to meet people. You like people.
I like
Julia.
people, and so do you.
You do like people.
Yeah.
I love people. I accept people. You know, my grandmother had one of the best lines ever, that the best people among all people are the ones that don't judge human frailty so harshly.
Mm-hmm.
Isn't that a great line?
I love that line.
You know?
One of the things I really respect about you is just how loyal you are. And so it was cool being at the book party last night and seeing people that you've been friends with for many, many, many years. So it's always nice to, it's a bit of a reunion.
You saw the whole band with there. You had my buds from high school all the way through my 35-year career on Wall Street.
Yeah. Well, I want to get into
my 11-day demise. I had political people in there, right?
You did. Yeah.
You had Republicans in there, right? You were surprised?
Yeah, mix. I'm not surprised because I know you. Yeah, I'm not too surprised.
Well, people will probably be surprised by this, but I'll share it on your podcast. I talked to lots of people inside the Trump transition. I mean, they're all friends of mine. I grew up with a lot of these people. Jason Miller and I are out and out friends. You know, we know each other for 30 years.
I don't see why people can't be friends just because of politics. I don't really quite understand that.
Listen, Trump and I had personal issues. You can't grow up on Long Island in an Italian community and have somebody like Donald Trump, who you gave $1 million of your money to, attack your wife on Twitter. Mm-hmm. That's like a non-starter for people like me. Just cannot do that. He can do it to Ted Cruz. He can do it to other people. He can't do it to somebody like me without me responding.
That was the line that was crossed.
Oh, yeah. You can't do that. And so that doesn't mean I'm still a Republican. I still have a lot of friends in the Republican Party, very close to a lot of the senior people in the U.S. Senate. And I know a lot of people on his transition team who I like. And look, he won. I want him to do well. But you can't do that. You can't be friends with somebody that does that.
Right.
And also a guy that he can't apologize. Mm-hmm. You ever done anything wrong in your life? I've done a lot of things wrong in my life. So, you know, if you can't apologize, that's a sign of insecurity. That's a sign of it's a sign of human weakness that you can't apologize. Mm-hmm. And that's not frailty. It's a different thing. Yeah. It's more malevolent than frailty.
Curious, have you all ever tried to reconcile or reach an apology, or does he need to make the effort to apologize? Or?
Yeah, listen, you can't do that to somebody like me. You can't do that.
There's no coming back.
No, he could apologize and I would drop it and move on. But I've already moved on with my life. I'm just making that point that there are lines in life. Okay, I respect you. I respect your family. If you don't like something I'm saying, I'm a public figure. Attack me. Don't attack civilians.
Right.
Don't go after my wife. You know my wife. My wife's a very pleasant, very nice person.
Yeah.
Trust me, there are family members of his that were very upset about that.
Yeah. Okay. Well, I wasn't necessarily thinking that we would start with politics at all, but
okay. It's going to come up eventually.
It's going to come up. So
might as well put it out there. You have a lot of business people that listen to this thing, and they'll be like, well, Anthony's a lifelong Republican. Why did him and Trump have a break like that? Remember, he fired me after 11 days in the White House. I had no problem with that. I'm a big boy. Was loyal to President Trump for 2 years after.
You wrote
that.
books, one about a blue-collar president?
With me. Yeah, I'm a big boy, and you go into politics and you get knocked out like that. You can't be a baby. You can never play the victim in politics. But I was supporting him, said one thing he didn't like. He started attacking me. I'm a New Yorker. What do you think I was going to do? Of course I'm going to respond to it. I'm not a politician. I'm a New Yorker and an entrepreneur and a business person. And then, of course, he had to take it personal. He had to make it personal by attacking my wife. You know, you can't do that. Mm-hmm. Plus, you know, Julia, you know Deirdre. Her and I are very close, but we were having problems in our marriage at that time.
Which you wrote very openly about in your book, what was that one called? From the White House and back?
From Wall Street to the White House and back.
From Wall Street to the White House and back. Yes,
he wrote. Very close. Married now for 10 years. Been together for 15. We had a problem in our marriage when I was in the White House.
Did you miss the birth of your child, or almost did? I remember.
No, I did.
You missed.
I did.
Okay.
Well, that was more related to I was with Donald Trump, with President Trump, in the Boy Scouts area in West Virginia, and there was a 60-mile no-fly zone around Air Force One. I couldn't get out of there.
Mm-hmm.
And the baby was supposed to be born in August. He was born July 24th. He's a beautiful young man, 7 years old, on his way to being 8. Mm-hmm. And I missed his birth. And that was also a big bone of contention. Listen, we repaired our marriage. Knock on wood, we're stronger than ever. But Trump knew that we were in a difficult spot, and he went after my wife anyway. Mm. So when you're thinking about him, you may like his policies related to Bitcoin. You may like certain things about him. But you don't do that to people that are inside your orbit. Right? It's a sign that you treat people like objects in your field of vision. It's not a sign that you care about people if you do something like that.
Yeah. I'll say this. Your children are all incredibly talented, your adult children especially. So it's just amazing to see your kids flourish and thrive.
Well, it's very sweet. My whole thing, and I think you know this from my writing, I want to share and express my vulnerabilities with people because it provides space for your children to take risks and fail. I've had a successful career, but I've also had some big downturns in my career.
Yeah.
I've had some financial obituaries written about me. Mm-hmm. People thought, okay, I lost a lot of money in 2022. I'm going out of business, or got fired from the White House. It's done for him now. This sort of stuff, and making that very open and very real for my children, I think provides space for them. I have a lot of wealthy friends who I've read their books. They go up to the right in a straight line, Julia. Everything about their life is perfect. Mm-hmm. They never made a mistake. And you don't understand how much pressure you're putting on your children if you're revising the history of your life by telling a story about yourself that isn't true. Maybe it's your self-talk, maybe it's your self-narrative, but it's not true. We all have problems. Elon Musk, who's a brilliant entrepreneur, arguably the greatest entrepreneur in global history, but certainly as a contemporary, you have to look at him and say, probably the greatest entrepreneur in American capitalism. He was almost bankrupt in 2008. He had 2 companies that he was on his knees, and he pulled himself out of that, and he grew these 2 companies into hundreds of billions of dollars in net worth for himself. Michael Dell, I can tell you a story about him. In 93, his laptops were catching on fire. He had to rebuild himself. Bill Gates, operating system, the first one that they didn't work. They had to go, actually bought one from Digital Research, reformed that. And so every great entrepreneur, and I'm not saying I'm a great entrepreneur, I'm just saying that every great entrepreneur has ups and downs in their career. And it's very important that you show those to your children. Very important. If you do that, you create a lot of space for your children to be creative and to fail.
You're an open guy. How bad did it get for you? Like, what can you share? Like, how bad did the valleys get?
Economic downturn.
Yes, for you. Yeah.
Well, bad because I'm a public figure. So we went down 39% in 2022. We also had some of the Wall Street wirehouses pull money and recommend a sell recommendation on our fund prior to that, and then during that, frankly, because we owned Bitcoin. And Bitcoin at that time was very controversial.
FTX was that summer.
FTX.
There were a couple other blowups that
regulatory
summer,
uncertainty. Yeah. There was all types of things that were going on. And so you had to have the patience and fortitude to see through that. And so unfortunately in our business, you're only as good as your last trade. You're only as good as your last performance quarter. And so we were having a very rough time. Good news is 3.5 decades on Wall Street. I had a lot of loyal clients and a lot of loyal friends that stayed with us, and they've been rewarded because, probably not allowed to talk about my performance, but let me just put it to you this way. If you have 40% of your money in Bitcoin-ish like products and Bitcoin goes up 150%, you do the math. Let's say everything else on the portfolio is flat. I've had 2 spectacular years without getting into the granularity of the performance. And if you just stayed with us, you did incredibly well. And I think our best years are ahead of us. And so I think that the big message to people is sometimes not overreacting and sometimes just doing nothing. It's very, very hard on Wall Street to do nothing. You know, you're getting a management fee and you have an impulse and you get paid to do something.
Yeah.
But sometimes doing nothing is the best thing to do.
You know, like sometimes some of the best performers are the folks who forgot their passwords to their investment accounts period because they just don't mess with it. Yeah.
There was a great article about that with Charles. I think the Charles Schwab accounts, the dead people.
The dead people, yeah.
The dead people did better than the living people.
People are trading all the time, yeah.
But I had this thing, and I made a mistake on a podcast. So if you're okay with this, I'd like to correct it on this podcast.
Yeah, you can correct, yeah.
I had an account. It was for my son, AJ, who you met at the book party. He was born on the 23rd of September in 1992. On October 1st, I bought him $1,200 of Microsoft. I was 28 years old at the time. And even though Microsoft wasn't paying a dividend, I checked the box, reinvest dividends into the stock. This was a time in life where there was no internet.
Paper, yeah.
Paper was getting mailed to the house. I moved a few times. Goldman lost my address. We found the account. It was 26, 27 years later. I think I said it went up 88,000. And my son said, it didn't go up 88,000, it went up 288,000.
Dang.
And so it was $1,200, 3 decades later, all the dividends reinvested in Microsoft. And however, I looked at that chart, there was a period of time when Steve Ballmer was running that company, and Steve's a great guy, but for whatever reason, they were flatlining at Microsoft for about 8 or 9 years. And I would have sold that stock, Julia.
That's amazing.
Sold that stock.
Well, also
didn't know I owned it. And it ended up being a big win.
Yeah, what a surprise for your son too, and also good on Goldman for being like they probably saw Scaramucci, and I imagine they're like, it's got to be Anthony, right?
She called me. Oh, I got my. What's your social security number?
Born in '92 or whatever. They didn't realize it was your son.
Because it was a uniform gift from Miners Act.
Got it.
Yeah,
nice.
My name was on the account.
All right, let me ask you this about the darker periods. When you go through those periods, do you figure out like who your real friends are? Because I mentioned this earlier when I said you're loyal. You have stood by some people who've gone through some dark periods in their life, especially publicly in the media. So do you learn in those moments who your real friends are?
I think you have to run towards people, okay? I call it the island of Elba observation. When Napoleon got sent to Elba, there was a group of people that were like, all right, he's in Elba. He'll never come back. He'll never return to power. He's on Elba. We can ignore him. That's a very large group of people who did that. There are other group of people who said, hey, I'm going to Elba to see Napoleon. And I think when people lose a job or they get disgraced or they get knocked off their horse, if you're a really good friend, you run towards your friends in a situation like that. You don't run away from your friends. And a lot of people helped me when I've had bad things happen in my career. By the way, there are people that are mean to people on the way up. And I don't want to be cliche in your podcast, but when you're mean to people on the way up and you blow up, you disappear, because no one's calling you. When I got fired from the White House, you've been to my SAW conferences. I can't tell you the number of people that used to sit at my dinner table at those conferences, called me, hey, can I do something for you? Can I help you? Is there something I can do for you? Can I come have dinner with you? Blah, blah. And I say this to people, and I say this to young people, just have integrity. If you have integrity, there'll always be opportunity, and there'll always be people that want to build relationships with you.
Okay, so just like, not to like revisit like ancient history or anything, but
No, but like I'm happy to talk about anything you want.
The White House thing, like when you got fired, do you think that was because like political press is just totally different from like business press, like where you might be able to like
you mean because I had
shoot some shit with some people and not realizing,
Yeah, I mean, it was just a vicious guy, and I don't like talking about him because he's sort of dead to me, but you could read about that guy if you wanted to. He's had his comeuppance. There's just a vicious guy. When you're that vicious, and that family was a Long Island family that my family knew for several decades. Fellow Italian American on Wall Street. When on Long Island, when he went after me like that, he knew it was an off the record conversation, and I knew it was an off the record conversation. He wanted to go after me. I said, okay, listen, I'll never utter your name again. And by the way,
I see.
We will never have a relationship. You and I will never speak again. That's fine. And on Monday, if you report that, I'll get fired, and that'll be it. and I got fired. And I deserved to be fired. You know, that was an amateur mistake. I talked to somebody that I trusted, thought it was off the record. I believe I said it was off the record. If you listen to the tape, it doesn't look like I said I was off the record. And I'm not saying he cut the tape or anything like that. Maybe I didn't say it. It is what it is. I got fired. I'm a big boy. I deserve to be fired. I'm an accountable person. I shook General Kelly. Yeah, General Kelly fired me. Donald Trump didn't fire me. And when he fired me, I shook his hand. I said, completely understand why I'm getting fired. And there's no hard feelings or anything like that. John and Karen Kelly are very close friends of Deirdre and mine. We socialized together. I just took his wife, Karen Kelly. Of course, they lost their son, who was a U.S. Marine, his son Robert, in Afghanistan. He stepped on a landmine and died instantly, this young man. And they're big supporters of the Marine Corps Foundation, which pays for the children's college expenses of fallen Marines. And so Karen Kelly is on that board. And, you know, Deirdre and I try to support her. And they're great people, but he fired me in the White House. And you got to be a big boy. What are you going to do? You're not going to be a bellyacre, you know. I like I said, deserved to be fired. It was a very low moment because there were three things happening at the same time. Deirdre and I were fighting. Looked like that was heading for a divorce, which I definitely did not want to have happen. I get fired from the White House. I had to return to Wall Street under that yoke. I was getting lit up in the press. You get disfigured by those situations because people will form an impression of you that it's often two-dimensional. And in that case, it was a little bit of a caricature. And so, you know, you have to deal with that. You can't be a baby about it.
Yeah.
So, yeah, there were low moments, no doubt about it. There were tough times. But how do you survive things like that? You have to know your core, know who you are as a human being. And when you're making mistakes, you have to be aware of those mistakes and you have to own those mistakes. You can't pretend you didn't make a mistake.
True.
Okay, because you can't fix it.
Yeah.
Someone tells you, hey man, you had your head up your ass and you were a self-centered jackass. You can't pretend that you weren't that. You got to say, okay, Jesus, you know, I wasn't aware that I was acting like that. Let me be more psychologically minded. Let me be more aware. I certainly wasn't intentionally acting like that or trying to.
Yeah. Well, okay. So normally I don't.
How's that for honesty?
That's great.
Is that
normally
right? You're hitting me. I'm like almost hitting you over the head with the microphone.
No, you're all good. But normally
I
don't start the show this way. But you're a friend, so you're different. So I'm okay starting the show. But let's start where we usually start now, which is we always start with the big picture, like more of that macro view of where we are in the economy and the markets. And you know, one of the things about the show, Anthony, is you can take all the time you need to set the table when it comes to that view.
So I have Buffett's view of the market long term. You know, I understand that Mr. Buffett is selling stocks now. He's built a cash war chest of $350 billion. If we have a 20 or 30% correction in the market, people will look back at that and say, okay, well, Buffett saw something. He didn't like where asset prices were. He didn't like where the market was priced relative to GDP, relative to forward earnings, relative to book. And so he started shedding some of his assets. He's 93 or 94. He's a very, very smart, brilliant investor. I do like to follow him. So there could be some air pockets ahead for the market. I'm not saying that there isn't, but I have his longer term view of the market, meaning I look at the market right now and it could be expensive on all those metrics, but there's something happening that is transformative. It's very, very different from the dot-com revolution. And so when I was in my mid-30s, like you are today, we had a dot-com revolution. And in 1999, we were told that eyeballs mattered and companies like Yahoo, your old company, were doing very, very well, and they had very hard to justify valuations. And then the market imploded. Those stocks went down 40, 50, 60, 80%. Some of those companies went out of business. But the great companies, like an Amazon, may have gone down 80 or 90%, but look at where it is today. If you had the foresight to just hold on to these positions or to build a position. And so I can't pick the day where the market's going to correct. But it's not a matter of if the market will correct, it's when the market will, because this is the nature of stock markets, this is the nature of cycles. So I'm cautious about this, but I have a long-term view, and I'm a little bit older now, and I think I've been blessed with this insight or experience to be more patient. So when I look at AI, is there an AI bubble? Perhaps there is. Is there a bubble in the Mag 7? Those 7 great stocks that are all worth $1 trillion plus, and they are heavily, if you cap adjust the S&P 500, they're heavily, 25, 30% of the overall 500. And so would you be concerned about that? I would. But then I look at the monumental amounts of growth, the productivity gains, the age of robotics, the age of therapy, talking about biotechnology. We're moving from chemotherapy to immunotherapy. We're moving from, they're going to take cells out of your body and they're going to make a tumor, and then they're going to put it into an AI chamber, and they're going to develop compounds to hit the cells with. And then the computer is going to say, this person's DNA is sequenced this way, and these drug compounds will eliminate that tumor without causing any overall negative impacts on the patient's body, right? So we're moving from chemotherapy to advances in immunotherapy. It's going to drop the percentage of healthcare the GDP percentage that we spend on healthcare. The robotics are going to improve the way we're delivering goods and services. It's going to lower costs. It's a disinflationary thing. AI is going to, in some ways, hurt certain industries and hurt certain jobs. But every time that's happened, better jobs have come out of it. And so we could be sitting here. You just told me that you read my book listening to an AI-enabled voice.
Yes.
You selected a voice.
Yes.
You downloaded the book on Kindle and then you
put it in Speechify.
Put it in Speechify and you listened to it. And so imagine what couldn't happen in the future. The book that I wrote, From Wall Street to the White House and Back, I put the book into an AI software. It spotted grammatical errors. It spotted spell check errors. I made revisions to the manuscript. And then I hit another button. I said, so you've read the book, Mr. AI. What would you title the book? Could you give me 12 titles? I picked title 7, From Wall Street to the White House and Back. And so ChatGPT, effectively, a version of it, titled that book. And so just think about the productivity gains, right? I didn't have to have 2 or 3 proofreaders looking over the book, and human beings, fortunately being who we are, we make mistakes. But this thing revised the book, and it did it in, less than 5 minutes. My point is the world is transforming. When somebody tells you, Julia, that this time is different, you run for the woods. You always run for the woods. I'm not saying this time is different. It's similar. There was an S curve when automobiles came in. There was an S curve when the telephones came in. There was an S curve when commercial aviation came in. There was an S curve in the whole microelectronics, semiconductor businesses, the invention of the private personal computer, another big S curve when the internet came in. So this time is not different. It will come concomitantly with a boom-bust cycle. I'm not saying it won't, but it will transform us once again. We'll be sitting here 10 years from now saying, wow, I think Jamie Dimon, somebody said, we may end up with a 3.5-day work week. 1.5 days will have been freed up because of all this great technology, all this great productivity gain. So I don't want to bet against that, and I'm not smart enough to time it. So we could be in for some tough stuff coming. Who knows? I mean, Buffett feels like it. If you look at him and you watch him, it feels like he's worried about some things. He built up an enormous cash hoard. But I'm looking at it and saying, okay, if God willing, I live to the same age as my parents, I got a good 25-year run ahead of me, maybe 30-year run ahead of me. Let me put my portfolio and my clients on that trajectory without being overly worried about the short-term noise that's in the system.
Yeah. Well, if we're sitting here in 10 years, you still look the same. It's incredible. You don't age.
Botox.
You're the youngest looking 6-year-old I know.
I'm going to give, if you're nice to me, I'm going to give you my dermatologist's phone number.
Oh my Lord.
Okay,
yeah.
You got to be nice.
Sponsor this podcast.
Exactly.
Okay. So we have to talk about the book because is it fair to say that you pivoted the firm in 2020? Because y'all were like fund of funds.
Massive
Are you
pivot.
still a fund of funds, or are you just?
Yeah, we're still.
Okay.
We have a almost $2 billion fund of funds. We've got, the assets have gone up. I mean, when I wrote the book, we said there were $2.5 billion in assets. Our company's weird, and journalists sometimes write about it. They don't really understand it. It's fine. I bought Citibank's fund of funds business in 2010.
That's right.
What came with that business was this advisory business. And so we were getting like 10 basis points on $4 billion of Citibank's pension fund. The team at SkyBridge that we bought over was advising the pension fund on what hedge fund managers to put the pension fund in. They're getting 10 basis points for that. But we're a registered investment advisor, so we had to put that into our asset totals. So our peak at SkyBridge was about $5 billion in terms of our fund of funds. But we had this Citibank advisory business that took our peak much higher than that, because as a registered investment advisor, you have to include that in your totals, even though we're making a very small amount of money on it. So that business went away, and it was scheduled to do so. We didn't get fired or anything like that. It was just, they were moving that money out of hedge funds, and they were shrinking that part of their business. And so it was scheduled to go away. We bought that company in 2010, scheduled to go away in 2020. Frankly, didn't go away to 2022. So all of a sudden our assets dropped. They went from like, $9 billion to like $4.5 billion. People said, okay, he must be going out of business. And that was one of the financial obituary articles. But then we got hit really hard during COVID. We had a lot of structured credit in our book. And I had the worst year of my life in the month of 2022. Again, financially, worse year. I'm talking about health-related things like that. So we went down about 25% during COVID. Terrible situation. We're locked in our houses, can't go to the office. Office is closed. We're in a global pandemic. We're trying to operate off of Zoom. All the people are operating off of Zoom. We went down 25%. The Fed cut rates. We rallied back. I think we closed the year down 7%. It was a really bad year for us, and we lost assets. And unfortunately, a lot of my assets were tied to wirehouses. And as I said, you have a bad quarter of performance, people leave. So we then had to make a decision. Do we stay with what we're doing, or do we pivot into something different? And I got the Bitcoin bug coming out of the White House. I had met with 3 or 4 different people at the Fed. The Fed guys were talking about digitizing the US dollar. That never happened, by the way. Circle, Tether really mushroomed into what they are today, but they were talking about it, and they were talking about doing it over the blockchain. I didn't understand it, Julia. Okay, I was 53, 54 years old. I said, okay, wow, I'm going to miss this. I don't want to miss this. I have to be neurally plastic enough to get my arms around this and to figure it out. And it's tough when you get older, right? You were talking about Ken Langone. I'm going to tell a story about Ken if he's listening.
We love Ken, and he's welcome on this show anytime.
Yeah, but he's going to be mad at me when I tell the story,
okay.
But he'll laugh too. So Kenny doesn't read his own emails. So Kenny has Pam, his assistant, read his emails. So if I send Kenny an email, she reads his emails. She gets up and, hey, Ken, this is an email from Anthony Carbonetti. This is an Anthony Scaramucci. Here's their email. And then he says, okay, great, respond to the email, and she'll type it out.
Yeah.
Ken, why don't you read your emails? I'm 89 years old. I never really learned how to do that. By the time I was 60, emails came into effect. I don't do it. Right? I don't have a Venmo or a Zelle account. Do you have a Venmo or a Zelle account?
I do for paying people. Yeah.
Okay.
Yeah.
I don't.
Okay.
So if I have to Zelle something.
I don't know where my checkbook is.
Okay. Well, see, I have a checkbook.
Okay.
Because I'm an ancient fossil. You're talking to a fossil, so I have a checkbook. You have a Zelle account. I don't have a Zelle account. I call my wife. I say, can you Zelle this to somebody for me? Okay. Yeah. And that's what happens to people when they get older. They get scared or they get intimidated of the new technology, right?
Yeah.
So this was a new technology that I had to embrace and I had to understand. And so we took a massive risk in 2020. I said, we're either going to be a typewriter business in the world of word processing and computers, and we're going to go out of business. We're not selling a lot of typewriters in this country anymore. But trust me, in the 1940s and 50s, we were. A lot of typewriter ribbon. We don't sell them anymore. So I'm in a typewriter business. I've got to switch this business, and I've got to make a compelling case to my clients that we're going to switch them into something they wouldn't get from a traditional manager, but they need it. And they don't know that they need it yet, right? Isn't that what Henry Ford said? If I went to my customer, they want a faster
horse.
Right? Steve Jobs said, you think people knew that they needed this phone? They had a phone. They flipped the phone. They said hello to somebody. Call was over. They shut it off. You now have a computer with more computational power than what landed people on the moon in the 1970s, right? Or 1969. So I had to make that shift. I had to make that intellectual shift. I had to get enough clients on board and coach them to do that with me. And I lost assets doing that. Okay. And wirehouses put sell recommendations on the fund while I was doing that. So a lot of people said, well, why would you do that then? That's going to be really costly to you. And then, of course, we got hit very hard in the FTX situation. Yes. And there I was on the front page of the New York Post business section, sinking in the SS Moch in this dinghy. And I'm sitting there, and they got me looking like Tyrion Lannister, like I'm like a little, can't use the word midget anymore, but we'll just say some other word. I'm sitting there like this, and I'm sinking in the boat.
Yes.
And I'm like, okay, I'm getting annihilated here. And clients call me. It's so funny. In 21, we were doing great. Clients called and said, you're a genius. I can't believe you got us into Bitcoin in 2020. I love you. At the end of 2022, you're an imbecile. I'm selling my account. I'm liquidating. How could you still be in Bitcoin? Blah, blah, blah. So, okay. But there was a core group of clients, thankfully, that stayed, and they've had stupendous performance. If Bitcoin goes from 17 talking to you today in December of 2024, Bitcoin's 95,000, 96,000. But in 2022, December, 17,000. So you go from 17,000 to 95,000 in a core position. Okay, it has dramatic effects on your business, dramatic effects on your fund. And so now we're back in position. The great irony is the best time to give us money, Julia, was in December of 2022, which no one would touch us with a 10-foot pole. But now people are, wow, these guys really hit this thing. They really understand it. Of course, guess what? We're raising money again. It's the way it works on Wall Street.
Let me ask you this. Okay, you're raising money again. Are you actively buying Bitcoin, or is it just kind of riding what you have right now? Like, how does this work for you guys?
We buy Bitcoin all the time. Okay. We're in Saylor's view.
Were y'all buying when it was like beaten down?
Yes, so to the extent that we could. As if we got incremental capital, or I transferred a lot of money into our funds away from other things that I had. I don't have a personal account, but I had a trust, and I asked for permission to move some of that into Bitcoin and some of that into the funds and into the space. And so, and then as we raise capital, we're always raising a little bit of capital. We put it into Bitcoin. As we were withdrawing or redeeming from other hedge fund managers, we put more into digital assets, more into Brevin Howard Digital, more into multi-coin and assets like that, which have powered up our performance. But not perfect. We never caught the bottom. We've never sold the top. But, we are, I think, in the best position that we've been in the last 10 years of my business.
Okay. I know folks have been talking about the 100,000 milestone. Haven't reached it yet. I know there's also a bet. Mike Green, and I forgot who's on the other side of that bet with him, if it's going to hit 100,000 by end of 2024. Are you one of those guys that has a price target in mind?
I've been so wrong about this. I said that it was going to 100,000 at the end of 2022. It was 69,000 in November of 2021. I said, we'll easily get to 100. Here are all the reasons why. What happened is, because of the proactive suppression of the digital economy, digital assets in the United States by Elizabeth Warren and Gary Gensler, the prices that you're seeing today, in my mind, people say, oh, wow, Bitcoin zoomed up. No, Bitcoin was artificially suppressed by poor regulators, capricious, arbitrary, czarist-like regulators that have now been removed from the system due to the fairness of a democracy, and they're gone. And so now the price is back to where it should have been and could have been in January of 2022. And so I think these prices are actually low I think these prices are going a lot higher once we get bipartisan clarity on what a security is versus a token. What's the clarity on stablecoin regulation? What are the rules? Okay, will the SEC rescind its lawsuit against Coinbase and Kraken and then provide rules? Well, now all the SEC has done is they're trying to regulate by enforcement, and they're forcing people to spend millions of dollars on legal fees and shoot in the dark trying to get something right. Brian Armstrong is a compliant guy, okay? Trust me on that. The Kraken guys paid fines. The Kraken guys have tried to comply. These guys keep bringing lawsuits. You don't tell them what the rules are. They will follow the rules. All you have to do is tell them what the rules are. Once that happens, these prices are going a lot higher. I don't want to start throwing out, price targets because I get them wrong all the time. I said 100. I said at the beginning of this year, halving cycle's coming in April. Wherever this thing is in April, it'll be 4x that by the end of the cycle. It was 60,000. I said, okay, you'll get to at least 170,000 by the end of the cycle. This stuff will happen a lot faster now because of positive regulation ahead.
Okay. So let me ask you this then. The incoming Trump administration. I know you have your issues with President Trump, but what do you make of the administration and the stance on Bitcoin?
Listen, I'm impressed. And remember, the Fair Shake PAC won 48 out of 48 races. They put up $250 million. They went very hard at Sherrod Brown. He was a 3-term veteran of the Senate. He was a senior person from Ohio. He was head of the Banking Commission. He went super hard, super hard, and they took him out. And they put $40 million in that campaign. Now, Elizabeth Warren had her own base. One of the funniest things that I saw during the campaign silly season was Elizabeth Warren trying to debate John Deaton. I don't know if you know who John is, but he was a pro-Bitcoin attorney. He ran for the Senate unsuccessfully against Elizabeth Warren, and she couldn't explain during the debate why she was against it. Now, we know why she was against it. She was tight with Sam's parents. She was helping Sam. So was Gensler. Sam blew up and embarrassed the two of them, so they went after the industry super hard. Don't go by me. Scott Bessent, the incoming Treasury Secretary, said that on Fox Business about 3 weeks ago. So we know what they did. And so the Trump administration, Donald Trump did a great job of picking people for Treasury last time. Stephen Mnuchin did a great job. Scott Bessent is as good, if not better, than Stephen. He will do as well, if not better. You've got to get a good SEC chairman in. The president's children are very focused on crypto. They've gotten him, alongside of Vivek Ramaswamy and others, over the hump in terms of understanding that this is going to be a part of our future. I'm still close to a lot of people that talk to President Trump fairly regularly. He tells people that Bitcoin is the new oil. He sees it as a potential strategic reserve issue for the United States. He sees it as something that the United States needs to be a big part of. And so I applaud him for that. I like calling balls and strikes on people. And I think they've done a good job so far of laying out a framework. And the last thing, which I think is also very important, is there are senators like Gillibrand, our senator here, and senators like Schumer, senior senator from New York, that have told people privately, myself included, that they want cryptocurrency, stablecoin clarity in terms of what the legislation is going to look like. And they're hoping to do that in the first year of the next congressional term. So for all those reasons, from a regulatory point of view and from a demand point of view, you'd have to be bullish on this asset class.
Okay. Speaking of bullish, Michael Saylor of MicroStrategy, he was at your book party last night and he gave a toast, and he said you had to rework the ending of the book bit after. Okay, tell us about that.
Yes, he yelled at me, so politely, because he's a very polite guy. So he called me. He was in the middle of the Mediterranean, and he said, I read the book. I had to read the book before I was willing to write the forward.
Well, at least he did that. A lot of people don't.
The forward, right? He read the book. He said, book's great. I learned a lot. I mean, I learned a lot about people that I'm close to. I didn't even know these stories. How the hell did you get these stories out of these people? I said, well, I'm close to them too. And he said, okay. He goes, yeah, I really enjoyed the book. He said, but didn't like the last chapter of the book. And let me just say something. You're recommending 2% at the end. You said it's great investment. Here are all the characteristics. This is why I think this is one of the best investment ideas of my career. And then you say, so put 2% in. You have 49 other investments like this. So if you want to put 2% in something, that means you have to have 50 other ideas that are as good as this. I said, no, I'm just trying to be cautious. I'm a traditionalist, institutionalist, and people are still wary and skeptical of Bitcoin. Well, how much of your net worth is in Bitcoin? So I said, well, it's about 55%, Michael. It's higher now because prices have moved. And it didn't start there. Like, as an example, if you put a 10% position on in Bitcoin, it goes up 6 times. Your other assets are going up, but it goes up like that. It does eat up the pizza slices in your investment portfolio. And he said, well, if you're at 55%, why are you recommending 2%? And I said, well, I'm being cautious. He said, well, listen, I just want you to rewrite it. Just say, listen, I got 55% of my money in this. Most people recommend 2%, but this is one of the best ideas of my life. You should really pick a number that you're comfortable with. And then Michael, of course, you heard his toes. My number is 110%, right? I mean, he's long Bitcoin. He said you heard him say this last night. He made a $250,000 investment just to start to understand it. And I think he's got $25 billion worth of Bitcoin now on the balance sheet of MicroStrategy, according to what he said last night. And so he is, to me, he's almost like the Federal Reserve Chairman of Bitcoin. He's somebody that gets it. He understands it. He's proselytizing it. He made a presentation, which I think he's sharing on December 10th with the Microsoft board. He made it public.
I saw the little video.
Yeah, he open sourced it, the 3-minute video. I'm not saying that they'll adopt a Bitcoin standard or something, anything like that. But what if companies start doing that? What if companies say, hey, I got to have 1 or 2%? Maybe they won't say 110% like Michael, but maybe they say, hey, you know what? We're going to own some Bitcoin. The state of Wisconsin, the pension fund said, we're going to own it. They announced a $150 million purchase. I didn't speak to anybody there, but I know how pension fund managers think. If you're not long Bitcoin, you're short Bitcoin. And let me explain why. Because it will eventually be in the pie chart of global tactical asset allocation. So every big pension fund has some gold. Every big pension fund has real estate. They have private equity. They have stocks and bonds. They have other assets. And Bitcoin is going to work its way into that asset mix. And again, maybe it'll only be, Julia, 1 or 2%, but then you'll need to own it, right? Because you're going to be compared when the consultants come in to speak to you or your board comes in to speak to you, they're going to compare your performance to the overall pie chart of tactical asset allocation. And Bitcoin's going to be part of that. And so you got to get long it, because if you're not long it, you're going to be short it.
Yeah. My thing is, like, I bought it, I forgot when I bought it. Would have been maybe December 2018 or ish. I don't know. Back when there was like a hype thing, I was below 10. I always forget about it and then I don't mess with it. And then I'm like, I don't trade it. So I just keep it to myself. Okay. So let me ask you this then. You wrote in the book, I wrote this section down because you're mentioning like Wall Street. You said, the only way for Bitcoin to truly achieve Satoshi's dream of being outside the financial system was for it to be able to exist as part of it. The integration of Bitcoin within the regulatory framework of Wall Street has been a good thing, maybe the best thing that could have happened to Bitcoin since it was invented. You said you suspect that Satoshi knew this. I kind of find that a bit difficult to buy into, but I want to hear your thinking there.
So I've read the white paper several times. I don't know who Satoshi is. I did meet Hal Finney. This was like a fluke. I wrote that in the book. And of course, for those listening in, Hal Finney was the person that received the first Bitcoin from the Satoshi wallet. So he emailed him a Bitcoin to prove that the network worked, that you could actually transact over the blockchain on the Bitcoin network. And I heard Hal Finney make a presentation in 2012 at Peter Diamandis' Singularity University.
Yeah.
I didn't understand it. I put out a tweet that said, don't understand this.
Wait, what year was that again?
I'm sorry, 2012.
Wow. Okay. Yeah.
So
wow. That would have been really hard to buy Bitcoin back then. Yeah.
It would have been hard to buy it. It was at a very cheap price. It would have been hard to store it. You and I both know that there's probably 1 to 3 million tokens that have disappeared as a result of the problems related to the early storage of it and the problems related to accessing it. But what I gleaned from thinking about those presentations, my notes from those presentations, and from reading the Satoshi white paper, what I gleaned is that they wanted this to become a form of value where people could transact with each other. What I gleaned after reading Neil Ferguson's book, The Ascent of Money, that these guys looked at it from a technological perspective. They said, okay, what are the tenets of money that we've accepted over the last 5,000 years? Money is a technology that you and I are using with each other to avoid bartering. I don't walk into the bar with a calf that I just raised on my farm and I say to the bartender, this is your veal Parmesan special for the next 2 weeks. Can I have 500 gin and tonics? I don't do that. I have money in my pocket, right? And we have this technology. Now, these technologies are typically worthless, okay? And I'll give you evidence of it. I have a piece of cloth in my $100 bill in my pocket. It's 75% cotton, 25% linen. You can look it up on the internet. That's the composition of a US dollar. It's this big. Is it worth anything? Well, the answer is no, it's not worth anything, but we both perceive it to be worth something. If I give it to the valet, he's super happy with me because now he has value that he can exchange for something else. You have digits in your bank account. I have digits in my bank account. Let's say I have these many digits in my bank account and I buy a Mercedes-Benz. The digits come out of my bank account, they go into the dealer's bank account, and they deliver me this hard asset that's made of steel and has a combustion engine. But what are those digits? Are those digits worth anything? And so the answer is they are, because they're a ledger. They're a spreadsheet. Your bank is a database. It's a spreadsheet. It's a regulated spreadsheet. There's accountants observing it. You have a bank account. I have a bank account. We can transfer money with each other. We use that bank as our third party. What these guys did was they created a network. They said, we're not going to trust one person because we're going to have hundreds of thousands of validators where they're going to be examining these transactions and codifying them. So we don't have to trust anybody. We'll just trust the system. And this was a brilliant idea. This was a unique thing because they created a hard asset. And they also created an asset that can't be corrupted, because one of the things that happens with money from the beginning of time, once we understand what the money is, and if typically we've gotten that money from a third party known as the government or the local community when we were in small villages, wampum, seashells, you pick whatever it is, they make more of it.
Yeah.
And they corrupt it. But here's this thing, it's immutable, it's not corruptible, can't make any more of it. And therefore, he said in that white paper, I don't really have the time to explain this to you, but if it catches on, you may want to buy some of this though, if it catches on. And so that phrase, if it catches on, in my mind, I've extrapolated that to mean that it needed to become part of the artifice. It needed to become part of the financial system to be fully adopted. And by the way, more evidence of that, I've talked to several CEOs of big banks, largest banks in our country. They're my age. I sit down and talk to them. Yeah, I can't really put Bitcoin in these investment portfolios yet, until my bank can custody Bitcoin. That's a SOB 121 issue. I really can't go too crazy on Bitcoin. Yes, we'll take reverse inquiry on Fidelity or BlackRock's Bitcoin ETF. If someone calls me and says, buy me $100,000, yes, we'll put it in custody with his CUSIP number. But until we can actually hold digital Bitcoin and its expression in a wallet, in our bank, and it's appropriately accounted for from a regulatory capital perspective in a way that we can make money off of it, I can't get close to Bitcoin. Mm-hmm. And I think that's coming.
Yeah.
And so just imagine these 6, 7, 8 major banks, once they can custody and hold Bitcoin, how important this asset will be. And I'll make one more point on this. Bitcoin's at right now, as you and I are speaking, at about $2 trillion roughly in terms of its market capitalization. So that's like Apple, Microsoft, NVIDIA. It's in that $1 to $3 trillion zone. So it's stock. But if it's an asset class, it should trade to at least where gold is, which is at about 18 or 19 trillion. So if you believe, and I believe, and certainly my publisher believes it, because there's 40 or 50 of these little books, and they don't want to write a little book about something that isn't an asset class or isn't going to be part of the foundation of investing. Okay, they have a little book on value investing. They have a little book on
hedge funds
investing.
that you wrote. Yeah.
Little book of hedge funds are all in the front.
There's so many little books.
There's so many little books, right? And so they said, yeah, no, this is going to be part of it. So yes, we want somebody to write a little book of hedge funds. We've had success with your prior book. Do you want to write it? I said, yes, I do want to write it. I got to convince Michael Saylor or somebody like that, who's the king of Bitcoin, to be a part of it with me. And so that's how we put it together. But I just want you to think about what I'm saying. If I'm right, this is going to be worth 10x where it is today. And that would make it the size of gold. And gold, Julia, in terms of the overall capitalization of liquid assets around the world, at $18 trillion, it's still quite small. It's still quite insignificant. So Bitcoin can get to that number, frankly, without surprising anybody, without having it be a monumental move or monumental monetary crisis anywhere in our society.
Still early innings then, I take it.
Very early. Yeah, no, you're very, very early. You're not in the micro point of early, but you brought up something interesting. Even if I had the wisdom and the intellect and the foresight to buy Bitcoin in 2012, which I did not. Okay, I was blinded by my own biases. I was blinded by my own institutional thought process on Wall Street. So I didn't understand it. But let's say I did. It was trading, I don't know, $50, $60, whatever it was. But I still wouldn't have been able to buy it. I wouldn't. Yeah. I don't even. Have
or you'd be kicking yourself because you'd be like, "Oh, my thing's in a landfill somewhere or something," or I lost the key. Yeah,
right. Or
that would be really painful.
I would have bought it and lost it, or
sold it.
Didn't have the foresight. Now the Winklevosses did. In 2014, they had a settlement with Facebook and Mark Zuckerberg, and they said, "You know what? We're going to roll this money into Bitcoin." Mm-hmm. And I give them a lot of credit for that. And they had a conversation with me about it. They came to SALT. They talked to me about it. And I was afraid to do it, and I think that happens to you in life. You see something, it's not clear, it's not obvious. You don't want to be embarrassed by it, and you don't do it. And then I saw it, and I said, okay, I'm going to do it. And then guess what, Julia? I got embarrassed by it.
FTX right? And SBF.
I bought it at 17. It went to 69. Then it went back to 15. But thank God, okay, I had, at least at this point in my career, the patience, the wisdom, the luck, whatever you want to call it, to hold it. And so I held it, and now we're sitting here at 93. I think it's going to go much higher, like 150 to 300 over the next 5 years. Can't pinpoint it, but I think it will. And I want to be a part of it, and I want my clients to be a part. I want my clients to not miss out on this. And I want them to be a part of it with us.
Mm-hmm. You didn't, okay, so you wrote about a lot of different figures in here. You briefly mentioned SBF, only briefly. You didn't get much of a mention.
Important to mention him. I mean, but I wrote about him in,
yes,
from Wall Street to the White House and back. I wrote about my relationship with him. How much do you think
that set the space back, though?
A good year. I think it was a combination. It was the cocktail of Warren, Gensler, and Bankman-Fried set the industry back. But I will say something, and if I was Gary Gensler's friend, which I'm not, but if I was, I said, Gary, you should point out to the Bitcoiners and you should point out to the crypto industry that your decision, which was deemed by the judge to be arbitrary and capricious, he lost the Grayscale case, which forced them to put the Bitcoin ETF into play last January. But I would say to him, you helped the industry. How'd you help the industry? By not approving the Bitcoin ETF in January of 2022 when it was scheduled to be approved, you exposed the leverage in the system. You exposed the fraudsters that were in the system. And by April, May, June, July, the system was imploding. And you took out a lot of the bad actors and you took a lot of leverage out of the system. So the 95,000 Bitcoin number right now, Julia, is a much firmer, it's a more based number, if you will, than the 69,000 in 2021. FTX's departure, Ironically, even though Gensler and Warren were close to him, that departure helped the industry. It cleaned out the excesses that were in the industry.
I have to say, Anthony, it's been an absolute pleasure having you on the show. I love talking to you. It's so fun to do this in person. It's been way too long since we've done something in person. I think last.
Oh, anytime. I'll come anytime. Thank
well,
you.
we love that. I want to give
beautiful studio.
It is a beautiful studio. It's Matt Marlinsky's The Manhattan Lab.
Thank
gorgeous
you for
studio.
Displaying my book.
Of course, we
you
love
like
it.
the Hermes orange?
You know what? I do. I kind of like the Hermes orange. It's a great color. But I do want to give you the final few minutes here. Just obviously, folks, go pick up the book, The Little Book of Bitcoin. There are a bunch in that series. Little Book of Hedge Funds is also yours. I saw that at the book party. But let's leave the audience with some parting thoughts. Maybe it's something that we discussed in this conversation that you want to reinforce, or something that you'd love for them to think about.
I would say 3 things. First part of our conversation was somewhat psychological, and it was about
therapy. I like that.
And it was about resilience. And I would say own your shit in life. And once you're able to own your shit in life, you can make massive improvements. And it'll help your psychological health, it'll help your happiness, and it'll help your outlook on life. Own your shit. Don't hide from your shit. That's number 1. Number 2, I would say that people that are in the investment business, if you're an investor, people that are in business for 3 to 4 decades, they've had at least 8 to 9 cataclysms. They've had 8 to 9 bear markets that they had to survive. And those bear markets steel you for staying in things and being patient. So if you're a young investor listening, seek out older investors that have been destroyed in the markets like me over the 9 cycles that I've gone through, because it'll help you. It'll give you perspective, okay? And it'll teach you patience in the markets. And then the third thing I would say is that even though I'm not great on Venmo, and even though I don't have certain technologies in my life, you have to embrace new technologies, and you have to embrace new ideas. You have to force your brain is incredibly neuroplastic. It definitely can evolve and reshape its thinking. And you have to do that for yourself. And that requires risk. And when people say the word risk, sometimes they only hear downside risk. Okay, because we're 4 times more worried about losing our money than we are making it. But risk also means reward. And you got to be willing to take some risks. And this has been a risk for me. It hurt me 2 or 3 years ago, but it's been a transformative thing for my business and for my clients and for me personally. And I'm proud to have been able to have lived through it. And I just want to share that with people as a perspective that they can do it too.
Anthony Scaramucci, founder and managing partner of SkyBridge Capital and author of The Little Book of Bitcoin. It's been an absolute pleasure having you on. Thank you so much. Really appreciate you.
I love being here. So I want to say thank you to you and congratulations. And I love these and the whole thing. I don't know why. I mean, why on television? This Julia La Roche show thing.
You're way too kind.
I may steal it. Okay.
I'm going to email you a link.
There's
to
only
that
one of these
company.
for the next guest. You'll know where it is. Okay? I just wanted you to know.
Thanks, Anthony.
All right. Thank you.